Next skill I learned and paid big money, organizing. Once you got a few, get them to work together, see, and that's magic. Getting people to work together is magic. Now, yes, it's challenging, like having some, several members of your family getting to work together is challenging, but it's magic. Getting husband and wife to work together is challenging, but it's magic when it happens. But everything magic is challenging. Just gotta jot that down. Everything right. And it is, in your business, it is challenging, getting people to work together. It's like herding cats. Sheep are easy, but you gotta try cats, herding cats. But if you can possibly get it done, the power is so immense when you get people to work together. Here's all major promotions. Here's what you've got to come up with. The smaller promotions. The company comes up with major recognition. You've got to come up with small recognition for your people around you. The top 5. The company's got top 5. You've got your own top 5 in maybe 2 or 3 categories. Top 5, top 5, top 5. And those little recognitions, to reach certain levels in the company, you have to take major steps. But for you, recognition, let them take small steps. Here's one of the secrets of your kind of business. Rewarding people for small steps of progress. Rewarding people. Sometimes it's just recognition, handshake, pat on the back, Mary. And you will hear some of them say, that's him, that's the famous man. I said, well, that could never happen to me. He said, trust me. If you keep working hard on the disciplines like you're doing right now, that'll happen. You'll walk into a room full of people and you'll hear one say, that's him, that's the famous man. He saw it, and he tried to get me to see it.
Good morning, YouTube family. It is just before 10 a.m. on the 18th of November on a Saturday, and I've decided to steal a few minutes because the machine is still running and this is quite a large order, so it might take a while for it to finish. And if I don't record now and render the video and upload it, you'll probably see it on Monday or Tuesday, which probably won't even make sense when you start watching it back. So I'm going to do hopefully a 5 to 10 minute review of cable. Especially I won't look at other markets because I need to work, as you can tell. So I cleaned up my chart. We will talk about the mitigation block when I get to the 1 hour. If you watched yesterday's video, I just want maybe to have a continuity so we can touch on that when I drop down to the 1 hour. Right now I am on the monthly clean chart. We are going to mark our levels again and see what price has done so far. Okay, I want to take you back to look down here. This is the month because we're on the monthly. I want to take you back to October 2008. This is where price, the consequent encroachment, just about the midpoint of this CB here, Let's make this a little bit thicker so maybe you can see it for those who are struggling to see. Right, let's say just almost the midpoint of the 2008 CB. This is where price has struggled to trade above. In July 2014, the market did try to come up, or the pound did try to come up to reach for buy side, but again it couldn't push past the consequent encroachment of the 2008 October candle. And since then it has really been going down. This candle here came to the relative equal highs of January 2018 and February 2018, and this painting happened in May 2021 and June 2021. It couldn't trade above these highs, and since then we have seen a decline in the market in cable. This is why you hear me saying I am bearish on the overall market until these swing highs have been taken, because we haven't taken any swing highs since July 2014. So the overall trend is bearish. But even though the market is moving down, it has moments of pulling back to reprice a certain area or to grab liquidity at certain points before continuing lower. So right now in November 2023, we are possibly grabbing or filling an inefficiency. If we continue going up and taking this swing high, we are possibly going after this next swing high. It's a possibility. However, because our overall trend is bearish, we assume that all market is doing at the moment is respecting this order block. I'll do a rehash. This is a rejection block, okay, not order block, rejection block, because this CB here has traded below that. Okay, the same thing that happened here when market started trading lower. This was considered a rejection block because this change in the state of delivery, this bullish candle came back up to about consequent encroachment of the rejection block, and then the market kept going lower. As well, if you look at this CB here and you look at across from the CB, this was an order block. CB created, the July 2023 candle came up to about the consequent encroachment midpoint of this order block. It also came up, repriced the CB, and then it looks like price is going lower. This is where my predominantly bearish bias is coming from. Okay, so let me just mark my rejection block here for the monthly, and then we put our monthly since we are still here. Okay, sorry, caps. All right, and then we'll drop down to the next change in the state of delivery, which is this one, and below this change of delivery, as price was delivering to buy side, we have a busy, so we'll consider this an order block and a very strong level for that. Okay, so we'll mark that in, and we concentrate on the bodies. This is an order block. We concentrate on the bodies because the bodies open and closing price across the market is the same across all brokers. The prices that change are the highs of the or the lows of the day or the week or the month, because this is determined by brokers. And Michael always advises us to look at bodies because that's actual price, and wicks and tails are normally considered gaps. All right, gaps in price, because they vary according to broker prices. Okay, so as you can tell, the November 2023 candle at the present moment is still trading within the rejection block, and it is still at the consequent encroachment of the rejection block, which is in premium of this CB. Let me just mark it like that. The gap, as you can see, price is in premium. So we sell from premium, buy from discount. So right now we should be looking at selling. But even though I am saying that, it doesn't mean that a selling opportunity will be presented every single day. It means we are going to wait for a selling opportunity, and for us to determine price as a possible selling opportunity, our kill zone has to present a CB, and this CB has to happen either at the high, which is within the rejection block, or at a continuation order block level, and this will happen on the 1 hour time frame. That's where we are going to put in our entries. So let's just drop down to the weekly quickly. Okay, nothing much is different here. 1 2 3 candle change in the state of delivery to buy side. 1 2 3 candle. This is where our rejection block, this order block here, matches with our monthly rejection block. We still are, or still traded up to the consequent encroachment of the order block, and though it looks like we are trying to come back up, we haven't traded above into the premium zone. We might not, because price sometimes just comes to the midpoint and then continues lower. If it does trade through or wick through, it's okay. What we look for are the bodies. The bodies have to respect the midpoint of that level. It can wick through, it's allowed. All right, so where we are on the weekly is still the same. It does look like price is about to change and go up. However, I want you to notice something that's of importance. At the moment, this here is our swing low that structure has broken through. All right, after this we've got this next swing low. Even we can use these relative equal lows as possible price points. So price, this leg here, okay, traded past the swing low and could be retracing or pulling back into a higher time frame PD array, which is the rejection block on the monthly before going down. The only time that we might consider ourselves to be wrong, my apologies for the noise, there's someone who's outside, is if price was to do this, come up and trade above this swing level, pull back, and then we'll consider bullish entries. As price trades up, if it's going to be a change in the direction of price, as price trades up, it is going to pull back on the lower time frame. So as it pulls back, this is where our entry is. It will go up. As it pulls back, this is where our bearish entry will come in play. It will go up. As it pulls back, we are looking for bearish entries until we notice the break of structure. When we notice the break of structure, we will consider bullishness only when that happens. Okay, for now we are considering bearishness until the swing highs are taken. Okay, so let's clean up our charts again. So let's drop down to the daily quickly. Again, looking at the daily time frame, you can see we've got very strong bullish candles. This one was repriced completely. This one that we are trading off, this last week we've just come out of, hasn't been repriced. Again, we look to see if market is coming up to consequent encroachment of the rejection block and will reject lower. Because we are looking for bearish prices, all we do is look for CBs. We look for red candles. If the red candles don't present themselves, we do not trade. If the red candles do present themselves, we will trade, put our stop loss at 20 pips, our $50 loss. If we are taken out, we are taken out. If we are given profit and it looks like price is about to come back up, we'll drop down our stop loss, and then we get a few dollars as the days progress, just like what I did last week. All right, so for now, I think there's nothing much to say. There's no need for me to drop onto the 4 hour or 1 hour because the markets are closed, so price isn't moving. I just wanted a general analysis. Also, looking back, I've been talking for about 11 minutes now, and that's outside of my 10-minute time frame that I give myself to talk, and I think that should be it. And maybe just one more thing before I leave. I want to talk to you about how the market moves to those who are still learning to trade. the market moves in three directions, right? It either goes up, okay, or it comes down, all right, or it goes sideways. Okay, when you're caught in this sideways move and you don't know what you're doing, there could be a lot of damage done onto your account. This is why it is very important when you're taken out to step back and not try to jump straight in. Take a step back and go grab a cup of coffee, go out, come back the following day, reanalyze. If you're taken out again, do the same thing. If you're taken out twice in a week, you can wait until the next week, because the market will always present an opportunity either for you to buy, as in go up, or for you to sell, as in go down. But when you're learning, the mistake that a lot of retail traders make is that because we watch the retail marketers, retail Forex marketers, we assume that the blue screens that they're showing us are happening every single day, every single hour, every single minute. They don't show us the losses that are happening behind the scenes. With some, I'm discovering now, as more and more of them are exposed, is they will have maybe 2 different phones, and then they'll buy on one phone, they'll sell on another phone, and then they'll show us the ones that will come up in profit and the ones that is in a loss. They will not show, and really they don't make money from trading, but they make money from marketing, and they market and sell their courses. So when you're learning to trade, it's important for you to realize that this industry is not as easy as they want to portray it to be. It's a very difficult industry. And the reason why it's very difficult is because you're battling against yourself. Charting, as you can see, I really apologize for the noise. Sorry, there's someone who's working outside, so I'm really sorry. So maybe I need to just finish up quickly because I don't know how long they're going to be. But the reason why a lot of people lose money is because they're trying to make as much money as they can from one trade. So they want to buy a jet from one trade. Any business, if you're a person who works for somebody, you know that maybe this company has been running for so many years, all right? If you've got your own business, you know that it takes at least 5 years for you to start seeing some progress where your business is concerned. Some can even go for 10, 15 years without realizing that they are not making any profit. Trading, on the other hand, will hit your money immediately. So it will show you immediately that you've lost money. And as a result, if you can't contain your emotions, you go back in because you're upset that your money has gone, and you will lose more money and more money and more money. Then you come back and say trading is a scam. It isn't. This is the biggest financial industry in the world. There's no other industry bigger than this. So when we are charting or looking at the market, we are coming in from the retail angle. There's no way that institutions, banks, hedge funds are just going to hand us money on a silver platter. They are going to make it difficult. And also, if you look at the Fedwire, if anyone has actually investigated on them, they are the ones that process all of these orders. So whilst I'm here, let me just jump down to the 1 hour quickly, right? As they are processing orders that are coming in from these countries, maybe, Japan, for example, is buying the US. It's just an example. Or Great Britain is buying the US. When they're processing their orders, right? We're talking about millions of dollars here being delivered. When these orders are being processed, they have to give the institutions time to offload their positions. So you're offloading, let's assume $800 million. You can't offload $800 million onto the market in one go, but you can do it in different stages, in different chunks. So maybe you offload 100 million here, 100 million there, 50 million there, until your whole 800 million has offloaded. So when we're talking about the mitigation block on Friday, if, let's say, an institution had bought here and wants to start offloading, this is what price is doing, giving them a chance to offload. So if we are right and this is a mitigation block, right, these guys who are holding buy positions are being given a chance to offload their positions. And again, if we are right that the consequent encroachment of the rejection block that's on the monthly. If it holds, because as you can see so far, this whole week it hasn't gone back up to indicate that it wants to go up, like past this swing high. If this level holds and price does this, right, and then eventually goes down, it means most of these institutions have already offloaded their positions and they are now selling. And as price sells, it is also going to pull back. Okay, so it will still give buyers a chance to buy the market, and sellers who hold the market, like the buyers that held from here, will hold for the long run, and then they'll make more money. Retail traders, on the other hand, will be doing this. Oh, market is going up, let's buy. Oh, no, it's going down, let's sell. Oh, it's going up, sell, buy, sell, buy, sell, buy. By the end of the day, when you started off with $100, when you're going home, you're on margin call. So trading is more you, the operator, than the market, because the market is going to go up or will come down or it will consolidate. When you see these kind of candles painting, as in market really doesn't look like it wants to go anyway, don't trade. Wait for either the swing low to be taken or the swing high to be taken, then you decide you want to go back in. If you lose twice in a day, wait. If you lose 3 times in a week, wait. There's always next time. Okay, 18 minutes. Let me go, guys. I will be back on Monday. I've got quite a few to do, so I'll see you on Monday. Enjoy your weekend. Don't forget to like, to subscribe, and to hit the notification bell so you can be notified every time I post a new video. I appreciate you, all of you. Thank you so much for staying and supporting my trading journey. And let's grow together. Please write down your comments. What else you want me to touch on? I'm now learning how to vlog, so I think I will talk a lot about discipline and the psychology of trading, and how I learned how to do that, even though I've been trading or learning ICT for just under a year. I came across ICT in January of 2023, and before ICT in June of 2022, I came across the beautiful world of retail trading. So I'm still relatively new on the trading arena, but I think where discipline and self-control is concerned, I'm all right. So I would like to touch a bit on that, and I'll touch a bit on that as I vlog. I hope you don't mind, so you can see the other side of my life, and you see that it's not just about trading. Okay, so until until Tuesday. Monday I won't see you because I do not trade on Monday, so I won't be in front of my charts. But until Tuesday, I hope you guys have a fantastic weekend. Thank you.